Happy Tuesday, traders. Thanks for joining me this morning at 8:01 Chicago time on a snowy day here in Chicago. 9:02 Eastern, currently on the 14th of March, 2017. This is another Trader Bite. Again, we do this every day, day in, day out, when the markets are open to just stay abreast with how the market's story and saga is unfolding and how we may be able to position ourselves to take advantage of it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall stance of the market is towards selling. There was news that came out just a short while ago, around 7 Central, 8 Eastern, a threat from North Korea, a threat stating North Korea on Tuesday warned the U.S. of merciless attacks if an aircraft carrier strike group joining South Korean forces for military exercises fringes on the North's sovereignty or dignity. If they infringe on the DPRK's sovereignty and dignity even a bit, its army will launch merciless ultra-precision strikes from ground, air, sea, and underwater, North Korea's state agency says. This sent our S&P dropping fairly quickly afterwards. And of course, they're nuclear capable, so it's you got to take that threat seriously, and that's the benefit of nuclear weapons, I guess. So what that did is launch our markets lower. The drop from the scene of the crime. The scene of the crime was around 2366.50, and we dropped to 62, which is about 4.5 points, which is basically the range for the overnight session. The range for the overnight session was about 5 points. So we just increased that. Other than that, the news is circling around the new healthcare plan, which they're calling Trump Care, I guess, or the American Health something plan, and apparently it's likely to reduce the federal budget deficit by 300 billion over 10 years and cost 24 million Americans their health care. Today starts the 2-day FOMC meeting. The market in the Fed funds rate is pricing in a 100% probability of a 25 basis point increase tomorrow. So tomorrow is the big day of the week. The market's paying attention to the Fed's dot plot to figure out what the trend or path is for future rate hikes. And then, of course, UK Prime Minister Theresa May got the power now from Parliament to invoke Article 50 to exit the European Union. And then also overnight, China's retail sales were the slowest in 11 years. Retail sales climbed 9.5% versus a year ago in January, making this the smallest increase since 2006. Other than that, it's a mixed bag. Europe is lower. European indices are lower. U.S. dollars higher. The gold is trading at 1204, basically 1203.90. The only products that are up this morning are safety products, namely U.S. dollar, Eurobond, gold, 10-year, and Treasury. The Treasury bond, the U.S. Treasury bond, the Japanese yen, surprisingly, is slightly lower. The rest are all lower. And crude oil continued its move lower that I had discussed yesterday. The expectation was for it to rest and then continue lower. Yesterday, crude had a perfectly balanced, completely Gaussian kind of trading profile, just a perfect auction yesterday. And now we've gapped down below. Crude is trading at 47.68 currently, with a low of 47.59 in the overnight session. So that's how things are shaping up. Let's take a look at what we expected yesterday just to get through this. Actually, real quick before I forget, One of the things we needed to go over is economic releases, and there really hasn't been any. There really isn't any planned. The PPI the PPI release came in this morning for the U.S. The PPI final demand for February came in stronger at zero point 0.3 versus zero point 0.1 year on year, 2.2 versus 1.9. And then going forward, we really don't have anything on the calendar in terms of releases and speakers. So nothing there. As far as what we were expecting yesterday I was looking for an early push up and then for the market to roll over and test the lower end of value here. The market's opening in value. The market has a nice Gaussian middle here, middle profile left behind from Friday. But the way things were shaping up, I expected the market to put in a failed low, an attempt low, go corrective, and push through yesterday's high. Could not do that at all. That was a very high certainty setup for yesterday. So I was stalking longs all morning, although I just could not find a clean area to see a trade. So nothing there, nothing easy there. It was very tight. The secondary hypothesis is that we push to value high and then start rotating down and then test the prior day's low, the excess low, before we bounce back up and finish somewhere in the middle of where we ended up on Friday at 2368. Here's what actually happened. Look at how tight that is. Let's clean this up. Really incredibly tight range. The entire range yesterday was from 2372, which I finished with a double top, to 2365.50. That's 6.5 points of range, or 5.5 points of range, with a very Gaussian profile. Just nothing there. The market just couldn't. The market really couldn't go anywhere. Here's what it did though that was very interesting. It went right to value high. You see this gray area right here? This gray? That's value. That's the prior day's value. This is a valid value area. We're opening in value. We went right to 72, which was value high. Then we pushed right to 65.50, which was value low. So what the market did basically is go from value high, value low, to value high yesterday. This was absolutely, in my opinion, was setting up to continue higher. This is a classic market that is rotating higher. Here. Let me draw it again. Oop, let's draw it again. Here's the channel, something like that. The market breaks higher, gaps, expect it to pull back, and then sit sideways. That was yesterday. And then continue higher. This is a normal reversal. Generally, we see neutral days. Yesterday was expected to be neutral. We generally see neutral days, and then the market starts to run to 78, and it got stuck at 72 with a double top at the IB high, which has a low probability of holding by the end of the session, or relatively low probability of holding by the end of the session. Currently, we're trading down here at 65 quarter, which is yesterday's low. We're still inside of Friday's range, so I'm expecting another balancing day. So overall, what we accomplished yesterday was not really all that meaningful. We just essentially balanced for the session. So here you can see much more clearly in the profiles. You have the high, the all-time high, then lower high, one time framing down, lower high. Nice taper on these highs. See these tapers on the highs? Very tight tapers on the highs. Every day we come in and a nice little taper. There isn't a weak high among them. And then Friday comes in with a weak high. You see that double TPO at the top with a break of the one-time framing down and a weak high, good excess low, very thin volume at the low. And then yesterday we get another weak high with an okay taper on the low. So to me, this, I know there's news out there. I know it's very serious, but this is just shaping up to start moving higher again. The news is getting in the way of that right now, but overall, the market is conditioned to is in a good condition to continue to explore higher. Yesterday left us with a very poor high, very poor high. So really, the expectation was for us to continue higher, but we couldn't in the overnight session. The overnight session just did nothing. The overnight session overall. This is yesterday's profile. This is last night's profile, or the current session profile. Pretty much the entire session rested right in here from the high of yesterday to the low of yesterday. You could see 23.66 on the low before the North Korean drop versus 65.50. So we were just a tick below the high and a couple ticks above the low in the overnight session. Consolidation compressing, and again the expectation before this 7 o'clock news here. The expectation was for the market to wind up and start shifting higher this morning. Now that's all out the window. Now, from the overnight session, we can see that volume, the overnight inventory imbalance is to the sell side on volume and on price. Yesterday closed way up here, and this morning it's opening way lower. The expectation is for responsive buying. There's a high probability of responsive buying this morning. Okay. So let's shift this over. Let's look at where our flex levels are. So we're still just below the gap we put in on the 1st of March. We are trading just below last week's close. We're trading inside of last week's range, more specifically Friday. So the expectation this morning is for an open, a failed test lower, a push back into the range, and I'm looking for it to move towards the high and move towards the 72, break the 72, potentially 74. It is Tuesday. Statistically, it is likely to get more range than the prior day, and so I'm expecting a bullish engulfing type of pattern today. I'm looking for it to test from the low to the high for hypo 1. Again, that's to me that seems like the highest probability play. We're likely to get responsive again. The move down happened on news, and it occurred from 23.66.50. That was the scene of the crime on that news. I expect it to be very quickly back up there, if not even before the open. But I'm expecting the market to lead up this morning. As a primary hypothesis. Okay, the secondary hypothesis, if it's not able to, it'll have the responsive move and then it'll fail to hold, and then that starts us out on a reversal, which is not a high probability move. The expectation is it would test down to the HVM below from Thursday, which is down at 54. That gives us about 11 points of range. So I'm looking for 54 on this as a target. If it starts to sell off, that would be hypo 2, and that would put us back into neutral as opposed to reversing from one-time framing down to potentially one-time framing up. A move like this will put us into neutral, and then it's anybody's call which is the next direction. That's how things are shaping up right now. Good luck today, as always. It's not the ideal time to be day trading indices. We've known that for some time. It's really important for you to just sit tight and pick your spots. Don't trade just because you're bored. It's just a silly way to give away your money. You might as well just donate it to a better cause rather than throwing it away to predatory scalp system type trades. So with that, good luck, and I'll catch you tomorrow. Take care.